Hi, everyone. It's Coram and Justin Nielsen here with a look at the stock market for Monday, March 20th. And in today's session, we saw the major indexes rise on easing banking crisis fears, Justin. But the big story today was sector rotation, a big theme on investors' minds.
Yeah, it's certainly one of those things you have to be aware of. Now, it's a little bit too early to say with one day's action, but we certainly saw techs lag a little bit, whereas those had been the areas of strength. And a lot of the action was in the small caps, seeing those rise a bit. But we'll also take a look at some stocks: Palo Alto Networks, Booking.com, and First Solar today.
That we will, but first let's take a look at the major indexes. And the NASDAQ composite today up 0.4%, lagging, as you mentioned, Justin, with the tech heavy index here. Outpacing the gains today was the Russell 2000 up about 1.25%, followed by the Dow up 1.2%, and the S&P 500 up 0.9% today. So seeing that rotation here with the NASDAQ, which has been leading by and large, especially with last week's bounce. So to see it underperforming today, could that just be a factor of easing banking crisis fears and financials bouncing today and money rotating there? But like you said, we don't know how long that rotation could last.
Right, exactly. So again, it's hard to get too excited about one day, but certainly you did see the financials looking a little bit stronger. We could take a look at XLF real quick just to kind of get a sense of that. It was stronger earlier in the day, but still, quite a bit of progress from before. XLE, also energy. That was an
Hmm.
area that we saw a lot of devastation over the last week, and that was trying to make a stand. So I don't think it's necessarily one of those things where I'm looking at these and saying, oh, okay, it's time for me to invest in these again. But it's more
Right.
like, okay, if they can hold here and stop the selling, that might be a positive thing. And you got to remember that when we look at IWM, which is the iShares Russell 2000, that there is a very heavy representation of financials, about 15%. And a lot of those small regional banks that were getting so hit as, SIVB and Signature Bank and Credit Suisse, all these problems that were happening, a lot of those regional banks that were getting hit, those were kind of seeing a little bit of, again, not a huge bounce, but at
Yeah.
least stopping of the bleeding.
Yeah, a little bit of relief today, but it doesn't mean the picture has really changed too much there. Okay, let's take a look at the S&P 500 trying to get above the 200-day line. Maybe that 21-day line could pose continued resistance, but that's definitely the next level to watch on the upside here.
Yeah, so that's definitely the area to watch now. The Nasdaq was looking a little bit better because it was able to cross its 21-day moving average line, and and kind of put some distance above it. But the S&P 500 knocked its head up there, and looks like it has to kind of cross that. The good news is it is back above its 200-day line, but there's still a couple hurdles that it's got to cross.
Absolutely. And a quick look at the Dow as well, like the Russell 2000. It's been lagging, but outperformed today. And let's also take a look at some of the other sectors. Why don't we? Chips. Here's SMH up 1% today and hovering around its highest levels in about a month or so.
Yeah, so as much as it's not great that tech lagged today, SMH, which is the VanEck Semiconductor ETF, the semiconductors have been a really big pocket of strength for a while here. And so when I look at this and I see that it's not giving up ground,
Mm.
that makes me feel a little bit better. And so while there could be some sector rotation here, I like the fact that that the semiconductors really held. And remember, we look at SMH a lot of times as a proxy for that space, but uh, when you look at there's some specific names in there, especially AEHR, ALGM, and so on. There's a lot of strength in other names besides SMH, and some of these, you might argue are much stronger than SMH has been for a while. So I think it's good that it's not giving up ground. So we'll just have to see. We've got some things, we got some things coming up this week. Big one, of
Yes.
course, is the Fed meeting on Wednesday, when we get an announcement on what happens with rate hikes. If there's going to be a rate hike,
Mhm.
how much is it going to be? All of those questions will be answered on Wednesday.
Right, and potentially causing ripple effects across the market. And Justin, in addition to chip sector strength, we've also talked about a number of software sector names looking interesting and holding up. So here is the IGV ETF tracking the software sector. So holding tight here as well, not giving up ground.
Yeah, so the software sector has been another area of strength. On IBD Live this morning, we were going through the industry group spreadsheet and noting that the computer software area was just one of those areas where we were seeing more. Those areas are popping up on more of our lists, on more of our screens, and had a good week last week. Now, Microsoft is a big component of IGV, and that was having a little bit more of a rough day today. It was down 2.5%. But again, when you look at the big move that it had last week, it's okay for it to come in a little bit. But overall, IGV, I think, is holding up pretty well, software in general. And we're going to be talking about one of those software names in the computer software security area today.
Yes, we are. And before we do that, let's take a look at the 10-year Treasury yield up a bit, just under that 3.5% mark. And boy, was this volatile last week, Justin. And like you said, we have the Fed meeting coming up later this week, and the jury's still out on
Mhm.
what the Fed is going to be doing at this juncture with all the different additional factors that they now have to consider in light of the banking crisis and again those potential ripple effects on the market.
Yeah. Yeah, it's been a little bit nuts just watching the Fed futures. It's been all over the place. 50 basis points was baked in, and then it was, coming down 25 basis points, and then no hike whatsoever. So it's been basically as volatile as the stock market. But what you do notice here on the 10-year Treasury yield, it does seem like we kind of got a support area, right there around the 200-day moving average line, and that kind of lines up with some previous lows at the beginning of February,
Mhm.
kind of the middle of January, and also way back in December. So there's kind of a line in the sand that's being drawn here, I think, for yields, and so we'll have to see where things go from here, and a lot of that again will probably depend on what happens with the Fed. I think right now there's a lot of the market kind of making some projections, but at the end of the day, what the Fed does is going to matter a lot.
Yeah, and now let's take a look at a software sector name on our radar, and that is Palo Alto Networks. We're seeing an RS line blue dot for this stock, fractional gain today, but seeing it hold up after a strong move last Thursday when it gained over 3%. We haven't seen strong volume really to the upside as of late, but it did have the strong volume on the earnings gap. And this has been a pretty orderly pullback with support right where you'd like to find it at the gap up low and that 21 day.
Yeah, and so I'm glad you brought up that earnings gap because that really is, I think, an area of interest. It sets up kind of like, okay, based on that earnings gap, you have a different valuation that investors came in with on this stock, and it's gotten comfortable at that higher valuation. So I like the fact that it's really been able to hold those gains. If you take a step back and look at it on the weekly, you can kind of see big move up and fairly tight action afterwards. It really didn't give up much ground. It really kind of stayed in the upper part, and actually made a little bit of progress. So this is acting like, a very strong stock. It got support at the 21-day moving average line. Arguably made like a place where you could have bought last week on
Hmm.
Thursday. Very strong action. But as you mentioned, one of the things missing here has been volume. This was on our list for swing trader. We were looking at it. That's what prevented us from pulling the trigger. So yes, it does have that strong volume from its earnings, and arguably, I think the price action was kind of giving you a signal on Thursday. And what I like is that it's still kind of giving you, it's staying in that buy range right now. So it's not too far extended above that 21-day moving average line. It's just about 3.3% above the 21-day line. So you could get into this with very
Right.
little risk. If you use the 21-day moving average line, you're not really risking that much for the potential of, I mean, this could easily get back up to that 213 level as a starting point. So a lot of potential return for not much risk on this one.
Hmm. Okay, next on the list, let's take a look at ticker BKNG. This is Booking Holdings. It strengthened a bit price wise throughout the day, up about 2.2%. Didn't have volume today, did on Friday, although that was the options expiration, which had an impact there. But if you're just talking about the price action here, seeing it rebounding off of the 50-day, getting back above the 21-day, that is potentially compelling for those who like seeing strength after pullbacks.
Yeah, it was a little bit steep on this pullback here. It it was down like what was that 5% one day, and then I'm sorry, one week, and then a little bit more the next week. But overall, I think this is held up well. The fact that it got support there at the 50-day moving average line, I think, is good. But as you mentioned, there is that volume component that is missing here. You did have a little bit after earnings, some of that volume come in. But there hasn't been much on the blue side lately. And we also have to remember that there were a lot of these travel stocks that were looking like they were setting up and having some good setups, good areas to be buying in. And let's just take a look at a few of them. UAL, for instance, DAL, both of those in the
Yeah.
airline area, and those just kind of fell apart. Over in the hotels, you had Marriott and MAR and Hyatt hotels, H. Those were looking strong, and then they fell, down to their
Hmm.
50-day moving
Even
average lines.
Airbnb.
Even Airbnb, right?
Yeah.
Airbnb, which was looking,
Good
very
on
interesting.
earnings. Hmm.
Nice gap up on earnings, and at least that one got held. It held the 50-day moving
Right.
average line, like Booking. So I think Booking and Airbnb are two of the stronger areas, stronger names right now because they did get that support at the 50-day moving average line. And the truth is, travel has been tough. It's been one of those things where. If you're getting into it on a breakout, that's been very tricky because as we just saw with those airlines, hotels, and we could go on. There have been a lot of breakout fakeouts in that area. So I think that if you're going to be trying these, it's definitely better to be getting it up on these bounces. And both Booking and Airbnb arguably are showing action in that regard.
Absolutely. Love that you're saying breakout, fake out now, by the way.
Because that's yep, you started it, and now it's so catchy.
It's a thing now. No,
Yeah.
let's take a look at First Solar FSLR up 2.5% today, slightly above average volume. I think it's hard to find a stock right now, Justin, that has had not only such a strong uh, look to it lately, but if you take a look back, it's been strong since last summer and really flexing its leadership capabilities here with a breakout on earnings and a nice orderly pullback. And as of right now, finding support at the 21-day line. So it does seem like something like this, even though the group as a whole has started coming under pressure, and maybe that's a big concern here. But even still, it seems like from a fundamental perspective, seeing it the turnaround expected and the big growth outlook for the bottom line, it seems like we should just be keeping tabs on this. So, not necessarily buying, but definitely keeping track of it.
Yeah, and if we take a step back to the weekly chart, you can kind of see exactly what you're talking about here, Ali. That this has been just a really strong move when you consider where it's come from its bottom in, just a few months ago, to around 60, and it's trading at 200 now. This has been a phenomenal move with support mostly at that. 10-week moving average line. Even this last base, I know it doesn't say that it's a flat base, but it's right on the borderline. It's 15% depth to that base. I think that's right. It was probably just a little bit over and didn't get recognized, but having a flat base there and then such a strong move up, the fact that it's really kind of retaining those gains. I think there's a lot of great stuff happening with the technical picture here. But as you mentioned, the thing that does give me a little bit of pause is the group. It's down to 172 out of 197. And let's just take a look at TAN for
Yeah.
a little contrast. And it can kind of show you
Ooh.
that, First Solar looks very, very different from this ETF. And if you think
Yes.
about some of some of the big players here that we were watching, Enphase Energy, which arguably has some of the best fundamentals and still does,
Right.
that one's been in some trouble lately.
Mm-hmm.
Solar Edge, SEDG, that one is not looking nearly as strong as
Mm-hmm.
it did. That's below its 200-day moving average line. SunPower, Array, I mean, the list goes on. There's just a lot of these stocks that are now trading below their 200-day moving average lines and 50-day moving average lines.
Mm-hmm.
So First Solar is definitely sticking out. And while that's good, we like to see strength, we like to see leadership. It's a little bit disconcerting that we're not seeing anything from the supporting cast members here.
Mm-hmm. Yeah, so true there. All right. Well, the other thing too, Justin, is I mean, we're not in a strong market where, yeah, you get that breakout, then the
Yeah.
pullback to the 21-day line. And that's where, if you miss the breakout, you can be initiating a position with a bounce off of a 21-day line like this. We're not in that kind of market environment, it doesn't feel like.
Yeah, so that's an important point, and maybe what we do is we just kind of tie a little bow on this session with a look again at the Nasdaq Composite, but on the weekly chart, just as a reminder that we still are kind of on the fence here in terms of this is still a downtrend. It's trying to round out, it's trying to change, and it's trying to hold. But if you look at the long term, this is still a downtrend, a long-term downtrend, and a
Mm-hmm.
short-term downtrend. So you've got both things going against you right now, and we just need more evidence that we are able to kind of turn this around. And this is where it's important to be patient. Don't feel like you have to be getting in right at the bottom. If you're like, oh man, if only I had bought at 10,000, we're trading at
Mm-hmm.
11,600 now. It's not important to get there at the bottom. If you are there pretty close to the turn, within a 5-10%, that's fine if this is going to be a prolonged move. But if it's going to be a lot of back and forth, that's where it can be very tricky. You can get hurt quite a bit in that choppy action. Even if it's not making much progress to the downside, your portfolio
Yeah.
can be taking, these small hits, these small paper cuts that start really adding up. So you really need to be careful of that. And again, I think the jury's still out on whether or
Yeah.
not this uptrend is truly going to be able to establish itself, because that January 6th follow through day that we had looked very promising. But here we are. We're back to market and correction because it's a little indecisive as to where we are right now.
Yeah, I think indecisive is a good word for it because it wouldn't take much for things to look like, they're getting into overdrive. And it also wouldn't take much for us to break below last week's lows either. So we'll have to see what this week brings, and especially what the reaction is going to be to the Fed meeting later this week. It seems like all eyes are on that at
Yeah.
this time.
And this is where, again, rather than predicting and trying to get it exactly right, we just let the market kind of draw us in.
Mm-hmm.
We follow that, on a daily basis. So certainly come back here to Stock Market Today and kind of get the analysis, and we'll tell you when things are changing. And to your earlier point that kind of started this part of the discussion, you're not going to want to be as aggressive on some of these buys until you have that market really
Yeah.
working in your favor.
Yeah, the wind at your back. All right. Well, thanks everyone. The conversation is going to continue tomorrow morning on IBD Live. So make sure you join us, investors.com/IBD Live for all the details. We've got David Ryan on tomorrow morning. And then Wednesday, we've got Mark Minervini. So your week is filled with investing pros who are there to give you their thoughts on how to handle conditions and how they're handling conditions in the current environment. So, looking forward to that. We'll see you there, and we'll see you tomorrow back here at the close.